Hey everybody, Jeremy here, coming at you for the live market bias recap for Sunday, September 10th and the trading week ahead. Looking at charts to adjust our market bias and figure out what side we need to be leaning on for the week ahead. We've got our pullback. We had said, we were overextended here and we needed some kind of a consolidation or pullback. Honestly, it's a little deeper than I would have liked ideally. And I'm going to zoom in here. Excuse me. So we gave up our 9 exponential moving average. We are now currently sitting on top of our 20 period moving average. And this line really needs to hold. We need to hold above 4,500 here on the S&P 500. If we give that up, it likely means that we need some more development, some more sideways action. And looking at the weekly chart, that would probably bring us down to 4460 to our rising 20 period moving average. So 4460 is the line in the sand that I am looking at for support to hold on the weekly chart. If this 4,500 line in the sand for the daily chart breaks, if we drop to our intraday here, you can see we got a nice double bottom here, had a nice price movement higher, broke free. Bulls were doing well, but we have since given all of that back up. We're back underneath the 200 period moving average, and we got the retracement back down into the 4,500 level, which was really important from back over here the previous trading week. So on the intraday, it's actually holding up pretty well, even though we broke down below that 4,500 level a couple of times over the last 48 hours. We eventually regained and closed back above it, which is really, really important. But there's a little bit of conflicting time frame here. On the intraday, it's looking like it's shaping up really well. But on the daily chart, we still not above that 9 EMA. So any triggers to the upside, we really need to see get back above and close above that 9 EMA that's currently at about 45.22 and 75 cents. On the weekly chart, just going back out one more time, we are holding that 9 again, but we need to break above that daily SMA chart. And if I zoom all the way in here, that's right up here. So breaking above that would sign for the bulls. Anything below that, we are in hesitation mode, and anything closing below 4,500 then leans a little bit more bearish back down to the 46 or 4460 level. If we go out to our NASDAQ chart, very, very similar chart here. And actually, let me check. We want to be looking at Z23 on that as well. I'm just going to put that in. When you get close to expiration on these contracts, sometimes Thinkorswim has a hard time knowing which one to analyze, so the price will be slightly different. So I'm going to adjust our symbol there and pop back out to the chart just to make sure that we have the correct most recent data. On the daily chart, very similar price action to the S&P. We are below the 50 period moving average here as well as the 9. So that is a big difference. And we had a little bit of weakness here because Apple had some negative news out of China. China is restricting the use of iPhones for anyone related to government, and there's fear that that might increase to other people as well. So negative news on China stuff in relating to Apple, and the market is fearing basically that that might bleed over into other tech stocks and might not be just for Apple, especially since Apple has typically had a fairly good rapport with China. And if they're willing to do that with a company that they have really good rapport with, what are they going to do for companies that they don't? So that's a little bit of the weakness that we are seeing here. There is some strength in charts like Google or Amazon. Meta is holding up okay. So there is some strength in certain areas there, but there's a little bit of fear on that regard. And again, if we pop out to the weekly chart here, it looks like just a normal bull retracement into the 20, confirmed off of it and moving higher. That looks great. If we stay above the 9, that's fantastic. I wouldn't mind if we came down and tested back down to about the 15,150 level. But that level needs to hold. If we do break down on the daily chart, that level needs to hold. So on the weekly chart, we have just a nice bullish retracement. On the daily chart, it's a little bit more messy. We kind of have this head and shoulders pattern here where we have a left shoulder. Let me get a different drawing tool. Sorry about that. we have the left shoulder, we have the head, and now we have formed a right shoulder, slightly higher right shoulder, and a breakdown below this level, this 150 level, would really be kind of the ultimate confirmation for this topping pattern on the daily chart, which is a reversal pattern and points to lower prices ahead. So that's a really, really important level to hold. If we do get back above and close above the 50-period moving average, and assuming that the news on Apple fades and Apple is able to buy back into strength, this chart could change very, very quickly. So I am open this week to both sides of the ledger. That is kind of the take-home message right now, is that we need to be flexible. There isn't a clear direction in the market right now. If we go to an intraday on this as well, just before moving on, you can see we have been kind of fighting higher. We've got this little, what is currently a bearish flag pattern on the intraday. So we need some time Monday and Tuesday for this to clean up and for the market to really give us a clear signal. Right now, it is not clear on the S&P or the NASDAQ. If we drop down to the Russell 2000, Russell's below the 200, which is not a great look, below all of its moving averages actually on the daily chart. Not a good look. We are coming into this diagonal resistance, or excuse me, support zone, so that could hold and create a turnaround story, but there is weakness in the Russell 2000 there, and I am not particularly liking the look of that. We are currently sitting right on top of the weekly 200, and if we don't reclaim some bullish price action here and get back above the 9 in quick fashion, with all of the economic reports coming out this week, this could break down. So caution is advised this week. If we go out, speaking of our Forex factory and our economic data, nothing to speak of Monday, Tuesday, so it's going to be really important just to see what the price action happens on that. We don't have any big expected news headlines for Monday, Tuesday, but Wednesday, Thursday, Friday, we get into it. Core CPI data, this is the Consumer Price Index. It measures the price of goods and services that consumers are paying in the market. It has held up in terms of estimates. They're estimating it to come in line with the previous. If this comes in hotter than expected, that will fuel the dollar moving up, and that will make it hard for equities to move higher. Similar story for CPI, for core PPI, excuse me, the price index for producers. This is actually forecasted to drop a little bit, which would help ease the pressure that we've been feeling on the US dollar. If this comes in actually hotter than expected, so anything above 0.2, again, that would fuel the dollar continuing to be on its bullish run that has just been insane lately and causing pressures on the equities market. Continuing through, we have retail sales, we have unemployment claims, and we have consumer sentiment on Friday. So big, heavy week right now going into Wednesday through Friday. Be careful of that. Be cautious of that. Unless we get a really clear line in the sand that breaks one way or the other in the S&P and the NASDAQ, and in the Russell especially, I'm a little less concerned with Dow Jones. But in those three especially, until we get a clear break of direction, one direction or the other, be very, very cautious with new positions. If we go out to the Fed tool real quick, we are still expecting that rate pause in September. We have a meeting coming up on the 20th of September with the Federal Reserve. It is widely expected that prices are going to pause at that 93% as of right now estimated. This can change very quickly based on what we get this week though, and this is the last economic week, economic data before we go into that September 20th meeting. So keep an eye on this through CME Group. Very, very important for this week, especially to see where that closes. Going out to our heat map, you can see the impact that Apple had on the market, and that bled over to semiconductors, because obviously if they're making less phones and less demand for phones, there's not as much need for semiconductors. So these two traded in tandem on that negative news. Microsoft did hold up a little bit. Google, slight loss, but not bad. Amazon held up, not really too much to say on that. We still are seeing massive strength in our energy sector. So that is a big spot to be continuing to look for strength. Saudi Arabia actually just announced that they are going to continue to cut production. So that is going to support the oil industry moving forward. So with that, let's just jump right into crude light. Crude light, let me pull these drawings off for you guys. Had a massive move higher. This is on the weekly chart. You can see we broke out of a really important resistance zone here. I would not mind having this pull back and retest this zone, confirm that as new support, and then move higher. I don't know if we will get that deep of a pullback or not, because we would have to break the 9 EMA to get that pullback. Any pullback here down to the 9 EMA or back down to around $84 and change would be definitely playable for the bull side. Or if we get a breakout above this high base that is forming, so above 88.08 that would also be actionable to the upside. And really, there is nothing to stop the price of oil from appreciating until we get back up to previous highs out here around $93. So this $93 zone is going to be my target for either the high base breakout or the pullback and then form of new higher support. We go out to gold real quick, guys. Nothing really to see here on the weekly chart for gold. Still struggling to reclaim the 20-period moving average on the weekly chart. On the daily chart, we have held this level so far. It is impressive that that is held given what the dollar has done, but I am skeptical that this is going to hold. This kind of looks to me like a head and shoulders pattern that might end up breaking down. So this is going to be highly, highly dependent on what direction UUP or the US dollar goes. If we see US dollar take some time off or pull back significantly, that will prop gold up. If it continues its tear higher, and if we put this out on a weekly chart, you can see it has room to run all the way back up to above $30. So big move higher potentially on UUP, depending on what the economic data brings us this week. We really need to see this chart slow down and take a breath, because it has just been killing the bulls here over the last few weeks, and looks like it's going to continue to. There's not any technical sign of a slowdown yet here, so it's going to be really important to see what happens on the economic data. Finally, just because we've been tracking it for quite some time, let's go out to natural gas. This bottoming pattern that we have been watching and tracking forever, it seems like for at least a few months now, has broken down once again, is now testing the lower ends of the range, testing this 20-period SMA on the weekly. We really need to see that hold. If this ends up closing below the 20, that will be a change of character. You can see every time it is tested below the 20 previous to this, it has rebounded and come back up and closed well above it. A close below that would be look out below, and we'd probably be looking for prices back down around 220, if not lower. So that is kind of the recap on natural gas. And for any crypto people out there, I guess we can take a look at Bitcoin real quick. Bitcoin, little low base here, threatening to break down on the weekly chart. If it does break down, we'd be looking at about 2,400 to 24,500 as the next zone of support. And if we go to a daily chart, this is not looking good. This looks like a breakdown waiting to happen to me. We've broken down and closed below the 200-period moving average on the daily chart. I'm going to remove all of my drawings here so you guys can see this a little bit better. Get rid of all of these and reset this for a potential breakdown. So we do have the low price of 25,510 from back in what was that, mid-June. So that's the price I'm going to be kind of anchoring myself against. I'm going to go $5 below that. If we close below 25,510, to me that signals look out below. And like I said, that would likely bring us down into the 2,400 to 24,500 level down here. So I'm going to set myself a target right there. And that's a really good move. That's a big move. So Bitcoin needs to hold here is the bottom line. Otherwise, more pain to come. With that, guys, I will wrap up. There are some good stocks still triggering bullish. There are an equal number triggering bearish right now in the markets from my scans. And we're going to have to wait and see. Monday and Tuesday are going to be very, very important price days here for the S&P, the NASDAQ, the Russell especially. Again, not too concerned with the Dow Jones right now. Whenever there is some sell-off happening in the market, it props up a little bit more than the rest of the indexes do, just because there are big dividends in that area to help offset. Summation, you need to wait. There's no clear direction. I wish I had a better report to give you. But when you have conflicting views on daily charts and weekly charts, it is really, really hard to have a concrete answer. And as traders, we need to be nimble. We need to be patient. And don't be too eager to buy this dip. Don't be too eager to sell a break. We need to see a close one way or the other, so that the market will tell us what direction we need to be favoring. Hope that helps, guys. Talk to you soon. As always, let me know if you have any questions in the comments.